Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Thursday, June 12th. Firstly to the S&P 500, and here we see quite an eventful day today, a change of sentiment in this market, and crucial to this market, as I suggested yesterday and the day before, was this small window that had opened up, and that window had been closed by the price action from the day prior to today, but the market failed to close down below there. Really, upward bias in this market was really contingent on the market remaining above that window, and now that we've closed down below this window, we could quickly see this market testing down to the area around the 1920 level. In this region here we saw price action trading around there and finding support in this region on 4 occasions, and there was some strong buying coming in around there, and then the market finally accelerated away from that area. So that's an area that could once again provide solid support if the trend does continue down. Now we've had a very nice extension of the size of the black body of this current candle, and it does suggest that the buyers have found some new momentum that they haven't had for quite some time in this market, just looking at the recent past. This series of white body candles and only one small black body candle in that series, so some newfound downside momentum from the sellers, and they've actually closed with control, showing some strong commitment to taking this market lower. Now if the market does trade down through the 1920 level, the next area of support is the Kijun-sen around the 1907 level, and then the round number 1900. So if we trade through this 1920 area, we could see the market substantially lower. Bearing in mind, however, that this market is bullish in the longer term and medium term timeframes, trading above the Kijun-sen and Tenkan-sen, and the Chikou span is still above corresponding price action, so we still have upside momentum confirming the longer term timeframes. And it's probably about time that this market had something of a correction. It has been up for a long time since we broke out up above the 1900 area. Throughout this rise here, we only had one really solid bullish candle, and really the market was looking overextended, and as you recall, I've mentioned on quite a few occasions, especially when we're trading up through this area to the major high around 1955, that we were trading a long way from the Ichimoku cloud, and the market was really out of balance. What we're doing now is coming back to equilibrium, so we are trying to find equilibrium, and equilibrium in that medium term time frame is the area at the Kijun-sen around the 1907 level, so it wouldn't surprise to see the market retrace back towards that flat Kijun-sen, and that's very often what happens when we have a flat Kijun-sen. In terms of the Tenkan-sen, this bearish close down below the Tenkan-sen suggests that there has been a strong change in bias in this market to the downside in that short-term time frame. But what I want to see is follow through. So the low of this candle becomes very important, and if we do test below there in a bearish manner, we quickly test down to around this 1920 and just beyond down to the 1915 level. So tomorrow's trading as it starts will be quite important. Now the problem here for the buyers is that if they do attempt to rally the market, they might find resistance at the Tenkan-sen at 1935, or even around this window again. But really the window is pretty much negated now that we've had this the closing of it, and then this close of price action below it. Next, moving to gold futures, and here we've seen a bullish candle today. The market was set up for a potential change of trend with the previous day's trading. We had a doji type candle, a candle of indecision, and the market was rejected on that candle from the important 1266 level of resistance. There was a very real possibility of a change of trend, but as always, and very important to remember, and I say this all the time, that even though we see a candle that tells us that there is a possibility of something occurring, we need confirmation of that. So even though we had a very indecisive candle, we were looking for a lower high and a lower low. That didn't happen. When we saw this market trading bullishly up above the 1266 level, it suggested that the buyers were very strongly in control, and they'd taken back the control that they lost from the previous day's trading. Now interestingly, the market has found resistance at the Kijun-sen, so that is going to be a crucial level if this market is going to move higher. And just looking at this price action here in this zone extending from 1300 down to this 1266 level, this is an area where the market was continually finding very strong support, and it is now a region where the market could find resistance within this zone. If the buyers do come into this market solidly, we could see the market trading up to the bottom of the Ichimoku cloud around 1296, but at the moment we are technically just bearish still in that medium term time frame, but trading so close to it here that the market is basically neutral. But this shift in sentiment in the short term time frame with this bullish, trading up above the Tenkan-sen, and the bullish follow-through that we've seen is suggesting that there has been a change of sentiment in this market, combined with the bullish breakout above 1266. So if we do see early bullish activity above the Kijun-sen, we could see this market trading higher. Next, moving to Nymex Oil, and here we've seen a solid bullish breakout up above the 105 level of resistance. Now, remembering the important thing here is that the market is bullish in all three timeframes, and if you recall from yesterday that even though we had these spinning top type candles and these candles of indecision, it suggested that there was a good possibility of a change of trend, combined with the market trading around this resistance at 105.31. The thing here is, though, that the Tenkan-sen has provided very solid support for this market, and the fact that the market is bullish in all three timeframes, combined with the bullish impetus of the buyers coming strongly back into the market, and the bullish activity above 105.31 has seen this market trade up to 106.95 as suggested as a possibility yesterday. At the moment we are trading in a fairly bullish manner up above that region. Now, interestingly, there isn't any major resistance until we get up to around 110.45, so some very good upside momentum in this market confirmed by the Chico span here. Now, just using the Fibonacci extension technique for a possible target here, and that's in the absence of any major peaks and troughs that we can use for support or resistance. And we do have the 423.6% level up at 108.34, and I suggest that that is a level that we should be watching very closely for some selling to come in. So there is a possibility of this market extending up to that region today. Now, of interest also is that with the Fibonacci retracement technique, we're in an expansive mode of that. We traded in a strongly bullish manner through the 100% level. We're now trading in a bullish manner through the 161.8% level. The market tested just to the 261.8% level for today's trading that has finished, and this current candle, as it's trading, is trading up above the 261.8% level, but we are starting to see some price rejection come into the market. So there is a possibility that if we do see a weak candle here, it may suggest a possibility of a pullback or some congestion. Now, interestingly, if we do see some follow through and in a bullish manner, we could see the market testing up to the 423.6%, which is at exactly 110.45, which coincides with that level of resistance as shown on this chart here, 110.45. So that will be a very, very important level of resistance if the market can trade up there, and there's no guarantee that the market can trade up to that level.